Hi, everyone. Welcome, and thank you for joining us for this webinar panel session today. The title of this session is An Introduction to Investing in Digital Currencies. I'm Ina Yulo from BrightTALK, and I will be your moderator for this session. We have three really cool panelists that I'm really excited to introduce to you, and we'll do that shortly. Just for now, there's about close to 900 of you who have registered for this session. About 100 of you are now here live, so thanks so much for that. And to those who are watching the on-demand recording, thanks for joining us. Just a few agenda points. So we're going to start things off a bit about why is this topic important? Why did we decide to cover this? We'll then do a short introduction to each presenter. A few of our presenters also have short presentations for you to let you know more about where they come from, what they do, and what their companies are doing in this space. At all times, please go ahead and send in any questions you might have. There's a question box available for you, so go ahead and type those in. We'll answer them throughout the session, but if you are joining us at the very end, no worries. We'll also leave some time at the end for your questions. Also, check out the attachments tab. There are some really cool resources that our presenters have sent through for you, and it'll be a good addition to the conversation too. So starting things off, why is this topic important? Well, according to Forbes, as of June 6th of this year, the collective market capitalization of all digital currencies crossed over $100 billion for the first time. I put two graphs here for you too. So on the left side, you'll see this is just a great picture of the landscape. So these are the financial services and strategic investors within blockchain and Bitcoin startups. So these are the ones who are investing in this space. On the right-hand side, really interesting. I'm sure a bunch of you who are joining us are wondering, okay, I've been hearing about digital currencies. Should I invest? Should I not invest? Interesting graph from Forbes here. They listed a few of the companies that they thought you should have invested $100 in 2013. And Bitcoin is just shooting up there at the top. If this doesn't tell you why this topic itself is important, I don't know what would be. Again, so we're going to start introducing ourselves. Again, my name is Ina Yulo. I'm a senior content strategy manager here at BrightTALK. I manage three different communities, so big data, fintech, and financial services, which also include asset management. I have a master's in marketing management from the Icos Business School in Barcelona. My background is largely around advertising and journalism. I launched and grew BrightTALK's fintech community and is now at over 170,000 global professionals. I've also added my email address there, so if you have any questions or you'd like to get involved with our community, you'd like to be a speaker, go ahead and let me know. I'm passing on to Ari now. Ari, could you give us a bit of your background and why you're interested in this space?
Yeah, so thanks, Ina, for having me and letting me speak. So my name's Ari Lewis. I'm a co-founder and investor at Grasshopper Capital, which is a digital currency fund. Before that, I was a technical consultant at Bell Falls Search and Consulting. I found a couple startups. One was called Koala, which is a esports company that received venture backing from a venture firm called Flash Darts, and got into the digital currency space about 5 years ago, and then really excited to see where it's going.
Great, thanks so much, Ari. So next up, we have Iqbal from eToro. So Iqbal, over to you.
Wow, I didn't realize the font size was that small on this slide. So just a quick background. I've been in internet startups for around 20 years. The last one that I worked on was a robo-advisor wealth manager called Nutmeg, which I built from scratch for 2.5, 3 years in the UK. For those people who are abroad, may have heard of Betterment or Wealthfront, so it's similar to them here in the UK. And now I'm the managing director of eToro here in the UK. Just a quick thing about eToro. I don't want this to become a sales pitch, but we've about 6 million users globally, and we've raised about 60 million in capital, and we've got about 300 people working for us. How does that relate to cryptos? Well, we're trying to make the buying and selling of cryptos really, really simple. 3 ways you can purchase them yourselves. You can copy someone, or you can invest in a portfolio. So the first one, as I said, if you want to come and buy, Bitcoin, Dash, or Litecoin, or Ripple, just come to the platform and you buy it. We operate in 140 countries with complete KYC and AML. if you're not sure what you're doing, or if you want to trade on a daily basis and want to make money from the huge volatility in Bitcoin and other cryptos, you can come and copy some of our best traders. For instance, Jay Nemesis, who has, I think at last count, about 10,000 people copying all of his trades. And the third way is, if you want to diversify, you can actually buy a portfolio or invest in a portfolio which has all 6 cryptocurrencies. Thank you.
Great, thanks. So we have Lewis lastly.
Hi there. Yeah, I'm Lewis Tuff. I'm a lead platform engineer at Revolut. And I've been in the financial industry for a while now. I was previously in front office technology roles at kind of Goldman Sachs and at UBS, and then jumped into the startup world just a couple of years ago as one of the first developers at Revolut. And since then, we've kind of grown from just a couple of us in a room with no furniture, sat on the floor, plugging away, to now having kind of 900,000 users and over 200 employees across the world. And yeah, we're just kind of venturing into cryptocurrency space, which is something that I and many of my colleagues have a personal interest in. And yeah, we're hoping to discuss some of the implementation and approach today.
Perfect. Thanks, Lewis. And I think you have a few slides here too. So this last one that I wanted to go over, I think I have a question for you around that after, so we'll save that, but just wanted our audience to take a look at the interface that you have planned for Revolut when it comes to integrating in cryptocurrencies too.
Great, thanks.
Perfect. So as mentioned, I have a few questions that I prepared for our panelists, but if you, the live audience, have any, please go ahead and send these questions in and we're happy to answer them. So first question, starting things off, I know that a lot of people, since this is an introductory session, will be amateurs to the cryptocurrency game. So Ari, you wrote a really interesting article, which is actually how I came across you and your profile. And it's called A Beginner's Guide to Investing in Cryptocurrency. Could you talk us through the first few steps you tell anyone who's interested in getting involved? And also if you could even just go over what is Bitcoin for our viewers who are just starting out, that would be great.
Yeah, no problem. So I guess I'll just start with the Bitcoin question. So Bitcoin is pretty much digital cash for the internet. That's the basic explanation. But what makes it really different is that it's a decentralized currency. So most currencies that people know of are fiat currencies that are backed by central banks. So someone controls it. So with Bitcoin, it's spread across all these miners who, using a formula, control the supply. So Bitcoin can only have 21 million tokens, and the supply is monitored by the miners and the users and the people in the network to ensure that the inflation schedule corresponds with what was written in the code. So unlike the US dollar, where the central bank can control, add more currency to the system to make it more inflationary or make it more deflationary, Bitcoin is ultimately just controlled by computer code. And then, getting into, how do you invest in these things, and how do you really enter the ecosystem? So I recommend that most people should read the Bitcoin white paper, which describes in more detail what Bitcoin is and how it works. So when you have a basic understanding of that, that's when I think people should dive into it. So there's a couple options in the United States for buying Bitcoin. You can either use a website called Local Bitcoins, which is where you can meet someone and exchange US dollars for Bitcoin in person, or you can use exchanges. So in the US, the most popular exchanges to convert US dollars to cryptocurrency are Coinbase, Kraken, and Gemini. If you're in like Asia, there's OKCoin and Bitsum and a few others. And then I think in Europe, you guys got eToro, and then I think Kraken is also available there as well. I'm not as familiar with non-US markets. And once you get on those exchanges, so if we take Coinbase, you have the ability to buy Bitcoin, Ethereum, and Litecoin. So those are like the top 3 cryptocurrencies for many people. And then as you get more advanced and learn more about the space, you can start buying into other tokens using what they call like altcoin exchanges. So one of the most popular are Bittrex, and another really popular one is called Poloniex. So what you can do is send your Bitcoin from Coinbase, Kraken, or Gemini to those exchanges and begin trading those. But from there, it gets more complex. So we'll start with the basics. And, Bitcoin is a really interesting investment just because right now it's an uncorrelated asset class. So if you invest in like equities or real estate, there hasn't been shown a correlation between the way Bitcoin performs in these other asset classes.
Cool. And Ari, I don't know if this one is one that you can answer. So someone from the audience is asking as well with regards to the U.S., do you know what the regulatory environment in the U.S. is like for cryptocurrencies?
Yeah, so cryptocurrencies are legal in the United States. There's nothing illegal about them. The United States is beginning to regulate token sales, or some people call them Icos. And those are potentially going to get regulated, but at the moment, the United States still hasn't pursued a legal framework around it. The only definitive legal framework around it is that crypto is taxed as property. So you have to pay short-term and long-term capital gains on it.
Okay, understood. Well, thank you. Another question from the audience. I want to go to Iqbal for this one. So we talked about the U.S. Someone is now asking, lately some countries like China are imposing stringent rules and regulation on Bitcoins and ICOs. How does that impact the digital currency prospects? Sorry, Iqbal, are you on the line?
Yes, I am. I actually had my mute button pressed, which is probably not the best thing. So in the short term, I think we will get jittery. Investors will get jittery. It's such a volatile market. So the moment we hear any news or rumors emanating from China, you see the price drop. But Bitcoin has always recovered. And the latest news from China is that, I think a couple of weeks ago it was all that they were stopping the exchanges, et cetera, et cetera. But what China is actually saying is that they want the exchanges to get legalized. So I think regulation is not necessarily a bad thing as long as it's done correctly. I think rumors are more harmful than actually having a clear black and white answer.
Yeah, definitely. And I think that that's one of those things, like you said, when it comes to space, because so many, it's been talked about so much in the news. Any small kind of, I don't know, gossip-worthy headline is really going to make it out globally, isn't it?
Sure. And Bitcoin and the other cryptocurrencies are very volatile, or should I say very nervous currencies. Mm-hmm. So it's far better to remove the rumors and actually just say you have a very clear strategy from a government and saying this is what we want to do. So I personally have no issues in governments kind of saying, we need regulation or licensing in the exchanges.
Of course. But I want to stay with you, actually. So eToro has made it a lot easier for crypto enthusiasts to trade cryptocurrency. You talked about this a bit earlier with your copy funds. What are the main challenges your users come to you to solve? And I know that talking about concerns, there have also been a few concerns about whether this is a bubble, or is there going to be tulip mania coming on? So could you tackle that too, maybe?
Sure. I mean, what's the main challenge is that a user comes to us? Simple. How do I make money? Yeah. I mean, we're a trading business, but I think from the crypto side, I think what they're looking for is a really easy place to invest, but also a place where the cryptos are secure. Both of which we offer. I mean, rather than going into the product that is our main premise, but in addition, it's kind of also a knowledge. Where to come to kind of get a knowledge on Bitcoins, because one of the questions we keep hearing, and I'm going to relate it to the answer to Tulip Mania here, is that the price of Bitcoin is too high.
Mm-hmm.
And I think what customers aren't understanding is Bitcoin in itself isn't the actual currency. And the simple example I use to explain that is there's only 21 million, or there will only be 21 million Bitcoins in circulation. You cannot have 21 million of something form a currency. There's just not enough to go around a global currency. So when people say the price of Bitcoin is too high, this is tulip mania, etc., you have to try to explain to them that it's the actual Satoshi which makes up the Bitcoin, which is the currency. So each Bitcoin has 100 million Satoshis. The value of a Satoshi today is $4,600 divided by 100 million, which is really, really tiny. So we're nowhere near tulip mania. So people like to think of it as gone from $1,200 or $300 to $4,800. But unless Bitcoin rises even further, it cannot be a currency. 21 million Bitcoins cannot be a currency. 21 million times 100 million Satoshis can be a currency.
Okay, cool. Thank you so much for that. And so next up, I want to go to Lewis. So Lewis, like I said, we kind of touched on it a bit. We showed a screenshot of what the new Revolut offering is going to look like. So there's not a rumor anymore. It's been confirmed. Revolut is going to start integrating cryptocurrencies. Can you share more a bit about this release and what it will mean for your customers?
Yeah, sure. So one of the key things we've been trying to do over the last few years is really listen to our users to help drive our roadmap. And one of the most requested features, without a doubt, has been cryptocurrency integration. And so we kind of visited this initially a couple of years ago, but it was a little bit too early to start having conversations with our partners due to kind of the lack of regulation, compliance frameworks, legal frameworks. And now what we're seeing is there's more and more media coverage, there's more and more applications of the underlying technology, the blockchain, but also of a Bitcoin as a store of value, and seeing it as kind of a valuable means to run a business. So we reopened the discussions just 6 months ago, and I've worked very closely with our key financial partners to really get them to understand, one, what it is we're trying to offer, and two, the power of these new digital currencies. And so what we're doing is in phase one, we are allowing our users to buy, sell, and instantly exchange from fiat into cryptocurrencies right from within the Revolut app, just as they can with 24 other holding currencies at the moment. So they have a very simple way of topping up their account with their debit card, credit card, or via bank transfer, holding that currency in their kind of local domestic currency, and then going into the app, seeing the live exchange rate and exchanging instantly into one of Bitcoin, Ether, and Litecoin. And what? Sorry,
just to go into that, in terms of were your customers also asking about this very recently? Because I know that I think 2017 was kind of the year that the mainstream media caught on to the Bitcoin craze. Was it only this year, or is it something that you've been hearing for quite some time now?
Yeah, so definitely the buzz and hype has been heightened massively this year. I mean, I think January of this year, when you start to see kind of Ether kind of growing very fast and growing exponentially in price, then there was a lot of buzz. And also, there's been a few kind of flash crashes over the last 9 to 10 months across Ethereum and across Bitcoin, where everyone's talking about doom and gloom, and then the next week they're very happy again because the price has shot back up. So yeah, definitely this year we've seen a huge increase in the number of users requesting it. Prior to that, it was kind of a few more fanatics and a kind of personal interest within the team to really kind of adopt this new technology as soon as possible.
Mm-hmm. Cool. That's really interesting to know. And I think it's good as well that you guys are actually, you know, like you said, I think that Revolut is one company that I can say does listen to its customers, and it's interesting that this, I think, was done, you know, pretty quickly. Is it something you've rolled out already, or is it still in the process of coming out?
Sure. So we're just we're working on development just in the last few weeks. The biggest hurdles have been speaking with partners, getting them comfortable with the idea and the approach. The technical challenges were kind of secondary to that in terms of timing and technical resources required. So we're in the final stages now of releasing the beta, initially internally to employees this week, and then to our beta list, which is ever growing. It has a few thousand users on it now. And then, yeah, we're hoping by the end of October to roll this out publicly to all of our users in EEA markets.
Oh, nice.
So the screens, sorry. I was going to say the screens that you showed in the presentation are kind of no longer mock-ups. They're actually in-app screens of what it's going to look like and how the users will be able to interact with both the live charts, historic charts, and to see the rate crosses with our 24 holding currencies in fiat, plus these 3 new cryptocurrencies. I guess one of the interesting things is that we offer the interbank rates on all fiat currencies. And with crypto, we're just going to have a small markup to cover the volatility, but users will actually be able to exchange between, say, Polish zloty and Bitcoin, which is very difficult to go to any exchange and get that currency pair.
Oh, that's really cool to know. I didn't know that was part of it. So, yes, thanks for that, Louis. And for my next question, I want to go back to Ari. So this is something that, again, people who are starting out in the digital currency ecosystem, looking into it, and they want to know, what do I need to know about blockchain technology?
Yeah, so blockchain is the underlying technology that drives these, cryptocurrencies, digital currencies. Blockchain just really means decentralized, trustless platform. So, like a blockchain is like a decentralized ledger. So most times when we think about like we go to a bank, and there's a central point of failure. So if the bank fails, that ledger where it's keeping the debits and credits could in theory disappear. So with blockchain technology, that ledger is decentralized, so there's no single point of failure. It's spread out across. They're using mining, all the miners, and it allows it to de-risk the chance of data being lost. When it relates to digital currency and investing in it, really it's just the underlying platform for the technology. So like Bitcoin is a type of blockchain, Ethereum is a type of blockchain, and there's also public and private blockchains, which most of the ones, if you're investing in digital currency, you just have to be focused on a public blockchain.
Okay, cool, thank you. Going back to Iqbal. So Iqbal, there's actually a question from the audience I wanted to go to now before I head to the question I had prepared for you. So someone from the audience is asking, in relation to your crypto copy fund, what currencies does it hold? How much does it cost?
Okay, so we hold, I was going to say the top 6 cryptocurrencies, but they seem to change on a daily basis. So it's Bitcoin, it's Ethereum, Litecoin, Dash, Ripple, and Ethereum Classic. And in terms of what it costs, it's just simply we just have a trading cost, which is basically the spreads, but we don't charge an annual management cost or anything like that. So costs nothing apart from the spreads.
Well, and I think it's actually funny because that leads really well into the question I had prepared for you, is that there are so many different cryptocurrencies on the market. So I know you listed those top 6, but for people who are interested in investing, so a question that I've been hearing often is, how do I know which ones to invest in and how are they different from one another?
Well, I mean, there are thousands. A majority of them aren't currencies, but they're tokens. But I think we're going to come on to the differences about those later. But if we look at the top 6, I think it comes down to investing in any business. You look at the team, you look at the idea, and you look at their ability to execute on the idea. In short, if we have a look at the top 6, Bitcoin, we know what it is. It's predominantly a currency. Ethereum is designed to be a platform which executes the so-called smart contracts. So think of it as a platform on which other applications or dApps, decentralized apps, are going to be built. Dash is quite similar to Bitcoin, except for it's faster. Unless you want me to, I won't go into details in terms of how quickly it mines blocks, etc. But it's faster. It has a few other bells and whistles added to it, since you can do private sends, you can do instant send, etc. Litecoin, again, very, very similar to Bitcoin, although it had things like SegWit added to it before Bitcoin did. It's working on a Lightning network way ahead of Bitcoin. So Litecoin and Dash are both competing for the Bitcoin space with a few bells and whistles added to it. Dash's business model is slightly different to Bitcoin in that it's got a company behind it. It has a venture fund behind it. So if you want to develop apps using Dash, there's a venture fund right now bigger than Y Combinator backing it. So you can go to ask them for funding. In terms of Ripple, as I said, it's a banking blockchain. It's going to be used primarily by the financial industry. In Ethereum Classic was the old fork. So I would simply say you got to bet the team. Based on the team, you've got to look at the idea and their ability to execute. And that especially goes for all the, I would say, the top 100. The top 6 I've just kind of gone through, but the other 94, you really have to look at the team. It's like investing in any other business. If you believe in the team and you really believe in the idea, then invest. Otherwise, I wouldn't.
Well, and can I also go to you for this question from the audience, which is what drives the underlying value of the cryptocurrencies? I think you've touched on that a bit, but I guess this person just wants a little more in depth.
I think right now there is a lot to do with supply, demand, and just rumor. Mm-hmm. I'd be lying if there's anything else. In terms of the underlying value, it depends on the currency stroke token. So for instance, let's say there's a currency based on file sharing, which we all know there is one. The value of that will be based on the utilization of the file sharing, so how successful the business is. Others are based on how successful, hard drive sharing is. Others are based on how successfully people will build a social network. So the value of the token is based on the utilization of that token. Mm-hmm. Similarly to Bitcoin, Bitcoin's valuation is right now based on supply and demand, but eventually it will be based on utilization. If nobody uses Bitcoin, it won't have a value for much longer.
Okay, understood. Okay, I'd like to move on to Lewis for this. So Lewis, we're getting a bunch of audience questions on this topic, but let's start here with this one I have prepared. So question that we've been getting a lot, is investing in crypto safe? Could you share some best practices around cryptocurrencies? Like how do I securely buy, sell, and hold?
Sure. So the technology itself is inherently safe, but again, all the tools are there to protect yourself, but whether you use it in the right manner is kind of down to the individual. And so what's key here is, as you mentioned, where do you source it from? So a lot of people are going through brokers or exchanges, and there you should stick to large exchanges which have either good financial backing or have gone to the extra steps of getting some kind of license or regulation from a partner in the industry. And many of the ones I've already mentioned are well known and has been kind of long-standing, but maybe others that in Europe that haven't been mentioned are kind of Bitstamp. They're kind of another prime example of having both a custodian and payment institution license out of Luxembourg, and they're working very closely with the regulators there. So yeah, the first decision to make is like where I'm going to source it from. It needs to be a respectable and good standing exchange or broker. And then the second thing is you need to employ all the usual security protocols you would with any sensitive data. So here, what you're managing is your private keys, and what you need to understand is that they are extremely sensitive data, and in the same way as you wouldn't share your credit card details or your passwords to your online banking with third parties, you should also employ very strict security protocols here when logging into exchanges and when managing wallets. And we can touch on the wallets later on. But the key kind of thing to understand is wherever you buy your cryptocurrency from, you need to know who actually is responsible for the wallet and the underlying private keys. And if you just go log into an exchange and buy your currency, and then your account is credited with whatever amount you bought, at that point, you do not actually own any cryptocurrency. And the custodian is the exchange in this case. So for best practice, I would always recommend buying through a well-known and respected exchange and then transferring out into a wallet where you have full control. And there are many of these services online, like blockchain.info and many other wallets, which are kind of a hybrid of an online and offline-based wallet, where you can just sign up for an account, and then they guide you through the process of either printing off a paper wallet or securely holding your keys. There are also a number of hardware wallets that come on the market. Two of note are Trezor and Ledger. And these, again, work in a similar way to these online services, but they allow you to, through an address, you can send your Bitcoin, Litecoin, Ether to these hardware wallets. You can connect online to make transactions, sign them, and update your balances. But then actually, at all times, your keys are held offline on the physical device. So the key things to note are where you're sourcing your cryptocurrencies is pretty important. Do you actually own the cryptocurrencies? That's kind of a key question to ask yourself. And then if you don't, make sure you then transfer them to secure storage, whether that's online or offline, through a hardware or software solution, to keys which you are fully in control of.
Well, thank you for explaining that, Lewis. And one of the audience questions, so I want to go to Iqbal for this one as well. So this audience person is asking, I'm interested in the AML, so that's anti-money laundering controls and procedures industry uses when exchanging cryptocurrencies into fiat currencies, particularly KYC and CDD, customer due diligence. Thank you. So could you take this one, Iqbal?
Yeah, I think that entirely depends on which country you're operating in. So firstly, in the UK, cryptocurrencies aren't regulated. So technically, I don't have to go through an AML KYC procedure if I want to convert cryptocurrencies to fiat. However, most exchanges which have been named in the conversation so far, including eToro, already do full AML and KYC checks. So for us, when we onboard a customer, you would have to go through the traditional process. We are actually an FCA regulated entity here, but the crypto side of it is not regulated, but we follow all AML, KYC processes that is needed for an FCA regulated entity, both fiat in and fiat out, with buying and selling crypto in the middle. And I'm sure that some of the other guys on this call also follow the similar procedures. So long story short, you don't have to follow the regulations, but most companies, and I would actually say if you're going to buy cryptocurrencies, buy them from a place which is already doing AML and KYC.
Mm-hmm.
Yeah, exactly. Just to add to that, that's exactly the model we're following as well here at Revolut. So we are also FCA regulated, and we're applying all of the same AML compliance regulation and framework that we do for our fiat currencies as we are for crypto, to make sure there's no kind of disconnect there.
Brilliant, thank you. So for the next question, so a lot of jargon sometimes surrounding this space. Ari, I want to go to you with this one. I know that you mentioned this in your article, and Iqbal also touched on it. Iqbal, I think, or Lewis earlier touched about tokens. So cryptocurrencies, crypto assets, tokens. What's the difference?
Yeah, so I think there's a lot of differing opinions for people in the space about what's a cryptocurrency, what's a crypto asset, what's a token. So, for example, for me, what I think is a token might have a different definition for someone in the space. So for cryptocurrencies, I look at them as like it's their own blockchain. So Bitcoin is its own blockchain, Ethereum, Dash, Litecoin. So those are what I would put in the cryptocurrency category. And then when we talk about crypto assets, digital assets, whatever you want to call it, these are tokens that are being built on top of a blockchain. So the most well-known is Iqbal mentioned dApps. So what companies are doing are creating token sales or Icos that are built on top of Ethereum. So they're launching their own tokens on the Ethereum network. So these are pre-mined coins where they'll sell like $10 million and 10% of the tokens that they're issuing to the public. So these are what I would call crypto assets. And then in terms of tokens, so tokens is a really subjective word. For me, I consider pretty much all cryptocurrencies, all crypto assets, tokens. Like I'll sometimes refer to Bitcoin as a token. I don't think many people would agree with that. I think tokens for most people though are these crypto assets, these initial coin offerings, and companies are building. In Ethereum, they have this ERC20 or ERC223. So these are it's like a standard for issuing a token on top of the Ethereum network. So I think for most people, when they refer to tokens, that's what they're talking about.
Okay, thank you. So next up, we're going to go back to Iqbal for this. So, you touched on ICOs. How they've been very, very much in the news lately. Could you give me the lowdown of what these are and why anyone should care as well?
ICOs, initial coin offerings. So it does relate to what Ari just mentioned previously, but what they are a simple way, an easy way to raise funding, or at least that's what they're being used for right now. Just as like a traditional market would do an IPO, these are called ICOs. Initial coin offerings. So if I came up with a brilliant idea, I'd probably create a website, write a 4-page white paper, promote my ICO, and offer tokens. So they should actually be called initial token offerings, following on from what Ari's definition is. But I would offer tokens in that. Think of a token like an equity, but it's not equity. You don't get any shares or voting rights or anything in the company. You're just investing in a token, which you hope is related to the company's revenues, profits, or whatever. As I was mentioning initially, the tokens are an exchange of value. So, a transaction. So you would hope that if you buy a token in a file storage company, that every time, if more people use that platform to store files, that the value of your token would go up. You can then go and sell that token on an exchange for Ethereum or Bitcoin or any other currency. So you're not buying equity. You're buying, I hate to use the word virtual equity because it doesn't really mean anything, but it's the easiest way to explain it. You're making an investment in a business, but you have no rights on the business, and you hope that the value of the token will go up.
Is this something that people should, I guess, maybe read up on them before they actually just dive into it?
I would say yes, but there's a problem. So in September alone, I think there were 130 ICOs which occurred. So if anyone has found a way of reading up and understanding all these white papers, please get in touch, because I haven't worked it out yet. I'm really confused, and the week goes past and I've missed 30 ICOs. So yes, read up on them, but there's so many, I wouldn't know where to start.
Yep, definitely agree with that. Okay, so last question from the ones I prepared, but again, to the audience, please go ahead and send some in. We've gotten through a bunch of the ones you have. There's a few in the queue, but we still have a lot of time for more. So this question I have, actually, one of the people from the audience asked the same question, so I'll go with their question. They're saying, for investing purposes, is Bitcoin best as it is more familiar and used widely? And also, can you suggest using any wallet or account, as many companies are offering it? So I want to go to Lewis with that. So, one of the questions I had for Lewis was, could you talk a bit about wallets, so both the online and offline kind, and how can we go about getting them?
Sure. Yeah, in terms of best investment, I don't want to offer any investment advice. So I'll leave that for the audience to decide what's the best investment. But in terms of wallets, so I guess starting from the beginning, what is a cold or hot wallet or an online or offline wallet? So when we say a hot wallet or an online wallet, we mean something such as you going onto the exchange and loading up some fiat and then buying some cryptocurrency on the exchange. So that wallet is live. It's a lot of them are actually within the exchange's private ledger, and it's not on chain until you actually send out your funds from the exchange to another wallet. And when we're talking about offline or cold storage, so we actually mean physically separated from the internet. So this wallet has no direct connection to the internet. It may live on a computer, whether that's a desktop, mobile, or one of these hardware wallets, but it is not constantly connected to the web. And so you're then reducing your risk of attack and massively minimizing one of the attack vectors. So with the cold storage solution, this is deemed the most secure, and it's definitely a best practice, something that people who have serious amounts of cryptocurrencies and wish to hold that in a secure manner, they should definitely be familiar with the approach and how they kind of do this. In terms of wallet providers, so there are a few that offer these kind of hybrid models where it's an online wallet, but you hold one of the keys, and these are known as multi-signature or multi-sig wallets. So in the case of one of the brokers that we mentioned was Coinbase, so you can use those in Europe and in the US. They offer their own vault solution, and in that setup, there are 3 keys generated. One of them they hold and only they know. One of the keys you hold and only you know. And the third key is actually encrypted with a password that you decide when you create the vault, and they actually store that for you. But they are never aware or never see the password. So they're just holding an encrypted key that they can never reveal without your input. And in that scenario, you have some comfort in the fact that they cannot execute any transactions or access your wallet directly without you providing the additional keys. And so as you come together with your passcode, with your private key, you can then gain access and make a transfer into or out of this wallet. So there's a number of these solutions available, and I guess off the top of my head, some of the kind of most well-respected ones in the industry and the leaders here are would be kind of with Coinbase or Xapo, that's XAPO, or BitGo. They're another very large provider of such. They often do it for institutional accounts, but many of them also have a more retail or consumer offering. But as I mentioned, as an individual and I myself, I will have a paper solution where you actually print off your private key and then store that somewhere securely, or you use this hardware wallet that I mentioned previously, and there you you have an additional protection because there's another concept here, which is hierarchical deterministic key generation, and basically this complex sounding phrase just means that you have a set of phrases that seed the generation of your keys. And so what does that mean to a user? It means that you can regenerate your private key from a set of, say, 12 input words. And these words are set up when you first create the wallet. And it kind of adds a more user-friendly way of generating a secure offline wallet, but also a way of ensuring that you're not as at risk with just having this one private key that if you lose, you'll never be able to regain access to your wallet. And in the case of these hardware wallets, it's exactly how they work. They use these hierarchical deterministic key generation process, and there's a standard that is adopted by many of these online and offline wallets. And it means as well that you can actually transfer your wallet between these offline devices by re-entering your 12-word mnemonic phrase. So I would check out Xapo, BitGo, Trezor, Ledger, and the Coinbase Vault, and read up on the various different offerings that they have there. But yeah, my advice is always that, one, you should understand who's holding the keys, and two, how do you get access both on a day-to-day basis, but in the case that you lose one part of your key.
Thanks for that explanation, Lewis. And I think that those are all really important points because, even right before you started, we had another person asking about, wallets. And I think that might be a lot of the time a big roadblock for those who are starting to get into investing in cryptocurrencies is that the first step that a lot of people say is, hey, get a wallet. And then there are all these options available. And sometimes having, lots of options can prove to be, I think, the biggest problem sometimes.
Yeah, and I think that's why something like eToro and ourselves kind of minimizing that barrier to entry and providing an alternative, simple solution where individuals that have maybe read about it in the news or discussed it over drinks with their friends, and they want to get some exposure to it and some kind of understanding of what these digital currencies are, how they work, how they operate, and how the price kind of fluctuates. And they can do it through platforms like ourselves and eToro.
Yeah, for sure. Okay, so that's it for the questions I have prepared for the panel. We're going to go into the ones that you guys are sending through. So again, thanks for sending those in. Go ahead and send more. We still have some time. So someone is asking, a lot of high-profile critics have called cryptocurrencies a Ponzi scheme. So Ari, what are your views on this? Everyone else is free to pipe in, of course.
Yeah, so for me, I don't like the choice words that people are calling, Bitcoin a Ponzi scheme. I think Howard Marks said it, as I think Jamie Dimon also said it in his remarks. And that for me, a Ponzi scheme is really purely based on fraud. And the idea is that the original money that's being put in is also eventually getting redeemed out for new investor money. So one of the interesting things here with Bitcoin is that a lot of the people who are invested in it originally are still involved with Bitcoin and invested in Bitcoin. So most of the digital currency investments that I made, 4 or 5 years ago are still in the system. And that, the other sort of concept of a Ponzi scheme is that they're promising you returns. And with Bitcoin, there's no central promoter. There's no person promising you returns. I think what has a lot of people confused is that this is like an emerging asset class. And we really haven't had an emerging asset class since probably the 1960s when venture capital came about and existed. So a lot of people in, traditional finance or just in general don't really know how to approach cryptocurrency, and they've seen it go up a lot, and they use words like scam or Ponzi schemes to describe it because they're sort of thinking in terms of, oh, this is just like, a penny stock promotion scheme, when in reality it's something completely new and different. Will it go to zero? Yeah, maybe it's possible, but I wouldn't characterize it as a Ponzi scheme. I think it's more of a, experiment, and we'll see if it ends up being successful. I think time will tell.
I think that's a good point that you made also, that there is, no promoter, there's nobody promising you that you will be getting something out of this. And I think that, with eToro, for example, I know that you always say that, this is, the investment is at your own risk. Make sure you read up, make sure that you do your research, and that these decisions and the advice that you're taking have to be from, whoever your trusted source is, and that these are your decisions at the end of the day.
Yeah, I'm not sure if you wanted me to comment on that, but yes, it's an investment. But unlike, I think the key was just made a couple of minutes ago, unlike other investments or Ponzi schemes, there is no kind of central body in Bitcoin who kind of stands to gain from this. Sure, there's people who bought Bitcoins back in 2012 who've gained already, and they could walk away with a lot of money, but they're the ones who are actually holding on to their Bitcoins. They're not actually selling, if you have a look at the transactions, because they believe in the fundamental kind of premise behind Bitcoin. So it's an investment, it's an asset class. It is, I don't know, they compare it to Ponzi schemes, tulip mania, all these words always get thrown out on anything like this when people don't understand it. And I think download the white paper, get into the code source and see what's actually happening in the community. It's nowhere. It's far bigger than, I was going to say it's far bigger than a Ponzi scheme, but take that in the right way, not the wrong way.
And I think you made a good point there as well, is that the beauty of Bitcoin and these other alternative currencies is that they're all open source and you can view the code. So if you are from a technical background, you can go in and see exactly what the structure of these companies are, how they work, how the mining works, what the hash rate is going to be. It's all public information, and obviously with the blockchain as well, all the transactions are public. So you really have a lot of power there as an individual to get transparency on what's going on.
Yeah, perfect. And actually, Iqbal, while we're on you, there's a question from the audience. This person is asking, how is the coming of quantum computing going to affect the integrity of cryptocurrencies? A little bit of a segue, but it's an interesting.
Yeah, I mean, that's a really technical discussion. But so quantum computing is, it can be anywhere from 5 years to 10 years away. But let's assume if quantum computing arrived tomorrow morning, the theory there is that the encryption algorithms being used in Bitcoin can be solved, which means we can find out everybody's private addresses and we can spend all their Bitcoins or move them. So cryptography is one of those strange things where hacking is kind of always behind most things. So as the development of these quantum computers progresses, there will be new what I would call encryption algorithms coming out, which will secure Bitcoin more and more. So if you have a look at the code base in Bitcoin, it was designed that you can actually edit the encryption algorithm. So something like we're at SHA-256 right now, we can move that to SHA-384, which will take even longer to hack. So, there's solutions are already being developed. There's something known as the quantum resistant ledger, which is also being looked at and developed. So yes, quantum computing will break algorithms. That's what it's really designed to do, but it will also lead to the development of new algorithms. So myself, and I'll be very surprised if there was anyone in the Bitcoin community is overly concerned about it.
Well, thank you. And I want this question for Ari. So this audience member is asking, will the growth of Bitcoin promote ransomware, judging from the recent WannaCry ransomware incident?
Yeah, thanks. So I think ultimately if people want to hack into computers, websites, they'll find ways to do it, and they'll find ways to get paid. So right now, Bitcoin, I guess, is the flavor of the month in terms of payments. But Bitcoin is probably not even the best way to really get paid for ransomware. So Bitcoin has a public blockchain. You can see all the transactions that occur on it. And the U.S. government is actually even developing software so they can try to begin tracking the actual identities of people behind these public keys. So you might be able to get Bitcoin paid from a company or a user for an attack, but ultimately all these transactions are public, and it's really not the best way to get paid because of this public aspect in the blockchain. So I don't really think it will lead to a growth of cyber crimes or something like that. I think ultimately, if people see something to exploit and they feel that they can get paid for it, they will go through with it. But I don't think Bitcoin is aiding in that in any way.
Okay, thanks for that, Ari. So a few last audience questions we're going to go through. So Iqbal, maybe this one for you. Someone's asking, in B2B, what challenges will M2M blockchain face in terms of interoperability between different industries?
So I can't comment directly on M2M because I don't know much about it. But what I would suggest is interoperability between blockchains is pretty similar to interoperability between intranets and the internet. So when the internet started off 20 years ago, there were a lot of intranets built within banks, within industries, etc., and they're all trying to work out how to get it to talk to the main internet. So Bitcoin is obviously working with things like sidechains. So rather than carrying transactions on the main chain, people can develop their own alternate sidechains. There are other products like Polkadot, which is putting together something known as interchains. So the idea is to bridge together all the different chains which people are developing right now. So there's a lot of work happening on it. I don't have any more detail on it, but Google things like Polkadot, and there's a lot more information available.
Perfect, thank you. So this one is a free-for-all for anyone on the panel who would be interested. Someone is asking, are there interest rates in cryptocurrencies?
Are there interest rates? Does that mean as in like a bank interest rate?
I think so. I think that's what they're asking, yes.
So the way I would look at it as an interest rate is you're really looking for a return on investment. So are there returns on investment in cryptos? I would say yes.
I think that's what they're asking, is that if we do invest there, are there interest rates to invest in the cryptocurrency, I believe.
Again, is there a return on investing in cryptos? Then I was going to say yes. But in terms of, is there a fixed interest rate in terms of you're going to get a guaranteed return every year? I'm sure there are some bonds available somewhere which give you a guaranteed return, but I'm not aware of one off the top of my head.
Okay, thank you. So last question that we have now, again, free for who owns node 0 in each of the chains?
Who owns node 0?
Yes, that's a question. For whoever asked that, could you maybe clarify that question a bit more? Because I think that's
I can only assume they mean who owns the very first node in the network. Which generally speaking is going to be whoever is developing the chain will set up the first node, just because how else do you test your new chain?
Yes, I see it. Okay. Yeah. Thank you for that. I don't think we have any more questions, but thank you so much to everyone who joined us. There were 300 of you in the end. And thanks so much to Ari Lewis and Iqbal. You guys have been amazing for this session. And again, for anyone who has any more questions, just send them in the feedback form. I'm happy to pass them on to the panelists. Rate the presentation. Let us know what you thought. And also feel free to let us know if there are any particular topics you want us to cover, and we'll do our best to pull together a great panel to answer these for you. And I hope to see the 3 of you guys who've joined me today back again. And thank you so much again, everyone, for joining us.
Thank you.
Thanks very much.
Thank you. Bye.
Yes, thank you. Bye.
Thank you.
Yeah.
Thanks. Bye-bye.